Hey traders, a very warm welcome to you. So it's a big one this. How do we recover from a big trading loss? It's going to happen to you. It happens to everybody from time to time, whether we've kind of broken some rules or whether we've been caught in something we didn't expect. A loss is inevitable. A big loss is inevitable. But the key is, how do we recover from that loss? The main thing we want to do is make sure that it's not career ending. Too often I've seen this, okay? This is somebody's chart here. They've made, they're going okay, they're doing okay. Big loss, and that's the end. Because then they're trying to get back to where they were there, and then they just go and they lose all the money, and it's just a complete and utter disaster for them. So making sure this is not what happens to you. So how do we recover from a big loss? And I've had some big losses in my time. So let's talk about how I put recovery plans in action, and also some of the things I've heard from other traders do as well, who are doing far, far bigger sums of money than me. Okay, so how do we recover from that? The first thing is to take time off. You must just take time off. People say get back in it straight away. For me, I disagree with that. I think you should take the time off. You should say, listen, okay, I've had a loss, right? And I need to just kind of think about what's happened here. Because for me, and again, very, very subjective, everyone's personal. For me, my nemesis would be I'd want to get that money back. I want to get back in there. I want to trade and get it back. So if I could get it back quick, it would undo the damage, right? That's just my personality. That's a weakness that I recognize in myself, and it may be for you. So if that's the case, taking the time off, saying literally, okay, I'm going to take a week off now. I'm not going to trade. I'm going to think about the good things that I've done in trading. I'm going to think about, the progress I've made. I'm going to think about also the steps I can take to never repeat the loss. So time off. And the second thing is analysis. And I can't even spell it, guys. Analysis. It's writing on a whiteboard. It frees your head. Okay, time off and then analysis. So in other words, why did the loss happen? Because the main thing we want to learn from the losses, devastating losses, A, we don't want it to affect our next trading, and B, we don't want it to happen again, so that you don't want to be seeing that thing happen again and again and again, because too many of those, you wiped out the game. So objective analysis without the pressure of current trading. So that's why we take the time off. We analyze it and say, what happened? You know what, I was in too big a size, I held a position overnight, mistake, mistake, mistake. Generally, it's the Swiss cheese model. Okay, and we talk about this as a pilot. I've done my private pilot license, and we talk about the Swiss cheese model. That's the worst Swiss cheese ever, but you get the idea. I can't spell it, and I can't even draw. Lucky I can do some trading, huh? So this is the Swiss cheese model, and the Swiss cheese model kind of says, hey, listen, one mistake doesn't cause an accident. If you forget to do something, forget to check this, or forget to check that, that one thing very rarely causes an accident. But what happens is when you forget multiple things, and those forgets or those mistakes line up, and then they get a straight hole through the Swiss cheese. So that one hole doesn't affect the cheese, but when you've got multiple holes in it and they line up together, that's when you have your accident. And if you watch programs like Air Crash Investigation, that kind of thing, that's exactly what happens. An engineer forgets to do this, and then a chief engineer forgets to do that, and then a pilot forgets to check this, and before you know it, they've lost rudder control, we're in the sky, and in reality it wasn't the fact of one mistake, it was a drastic mistake of the engineer forgot to kind of tighten a nut up, the chief engineer forgot to check it, and the pilot forgot to do his pre-flight checks with the rudder control. Sorry, that's the yoke, isn't it? With the rudder control. But each one of those, if one of those people had done it, it wouldn't have happened. So let's put it back to the trading analogy of the time analysis. We say to ourselves, okay, why did it happen? I was trading too much size. I took overnight risk, and it was earnings. For example, Swiss cheese, three things. The size on its own doesn't do the damage. The overnight risk doesn't do the damage. The earnings don't do the damage. But combined, they've done the damage for you. And that's just an example. It could be anything else. It could be a case of I've added to the position so much. And a case of I was adding to the position when I shouldn't have. I was trading on a day that was too active for that position size, and I was in a complete bad state of mind. Three things, Swiss cheese, result in a catastrophic loss. So analysing what it is and then saying to yourself, listen, putting procedures in place, standard operating procedures for your trading that say, hey, listen, I won't trade under these conditions. I won't trade above a certain size. I won't do this, I won't do that. It's kind of a good analogy to look at when you look at the aircraft industry or the aviation industry. You know, they learn very well from catastrophic failure and accidents to say what caused it. They go right back and they analyse it and analyse it. Okay, and don't get me wrong, I'm not comparing somebody losing a few thousand quid in a trading account to an aircraft disaster, but you know, the procedures that are in place can work well. Why did it happen? What can we do moving forward to stop it happening? So recovering from loss is part of this. Take your time off and then analyse what happened and then put in place a plan to stop it happening again. A prevention plan. A plan for prevention, right? So in other words, we've done the analysis. What do we need to do now to make sure that this never ever happens again? And we can do that. We can make sure we don't have the catastrophic loss again. And the fourth thing, final thing is, guys, is when we come back in, we need to come back in and we need to trade small. Okay, that's my advice is we come back in and you trade, you literally trade really, really small, you get back into the swing of it. Because don't forget, purely from a kind of a operations perspective, we're going to be out of tune with the market. We'll have time off, we wouldn't have traded, you know, we need to get back in. The last thing you want to do is go back in with, you know, bat swinging and then take another loss, hopefully not catastrophic, but you know, that does your psychological mindset and psychological capital no good. So trading small, get back into the groove of it, get back into the feel of it, get your strategies back on the ball, get in tune with the market, get a feel for the platform, get a feel for, you know, environment again, and sort of work your way back up to where you were. And then way back to where you were, hopefully it's gone behind you, you've forgotten about it, and you're trading as systematically as part of your trading plan. All right, guys, let me know in the comments below how you recover from a trading loss. Have you had a big loss? If not, do you think you've missed one just about, or you had a close shave? And that's kind of almost the best one. If you can catch it and say, listen, I nearly had a catastrophic loss. I had almost all the holes in the cheese line up, but I got away with it. Okay, let me learn the lesson and put in a place of analysis, time off, analysis, plan for prevention, trading small, but without the monetary loss that comes into it. It's even better. Anyway, guys, give a thumbs up if you like the video. See you in the next one. Take care. Bye-bye.